President Trump's trade war, a gamble on global economic stability. The world watches with bated breath as President Donald Trump prepares to unleash a full-scale trade war, imposing steep tariffs on some of the U.S.'s largest trading partners. This audacious move, despite widespread concerns of significant economic repercussions and fervent calls for reconsideration, signals a dramatic escalation in global trade tensions. The president, however, remains defiant, claiming numerous countries are actively seeking trade deals with the United States, a claim yet to be substantiated with concrete evidence. This assertion serves as a cornerstone of his justification for the aggressive tariff strategy. The most immediate and significant target of this trade offensive is China. Trump's administration has threatened to impose a staggering 50% tariff on Chinese exports, a move that would be layered atop existing tariffs, potentially reaching a crippling 104% total. This dramatic increase comes in response to anticipated retaliatory measures from Beijing. China, however, has issued a resolute response, vowing to fight to the end, underscoring the deep-seated tensions and the potential for prolonged economic conflict. This unwavering stance from Beijing casts a long shadow over any hopes for a swift resolution. The controversial tariffs are not limited to China. The president's plan encompasses a broad spectrum of nations, each facing tariffs tailored using a formula heavily criticized by economists. This formula, which divides the goods trade deficit by double the total import value, has resulted in significantly varied tariff rates. The European Union faces a 20% tariff, India 26%, and Cambodia a hefty 49%. These figures far exceed the 10% flat rate initially imposed on all global imports last week. The uneven and seemingly arbitrary nature of these tariffs has fueled international criticism and uncertainty. Adding fuel to the fire, prominent figures within the U.S. business community have publicly voiced their disapproval. Elon Musk, the billionaire CEO of Tesla and SpaceX, has reportedly urged President Trump to reconsider his course, expressing concern about the potential negative impacts on the global economy and American businesses. Furthermore, a lawsuit challenging the legality of these tariffs has been filed by conservative businessmen Leonard Leo and Charles Koch, highlighting the deep divisions within the U.S. political landscape regarding the wisdom and legality of the president's actions. This internal dissent further undermines the administration's confident rhetoric surrounding the tariffs. The initial announcement of these tariffs sent shockwaves through global markets, triggering a period of significant volatility. However, a glimmer of hope emerged on Tuesday as senior U.S. officials attempted damage control, offering assurances that the newly imposed tariffs might be temporary. This reassurance, coupled with the administration's insistence that these tariff levels represent a maximum, seems aimed at calming investor anxieties and averting a full-blown market crash. These attempts at reassurance, however, have been met with skepticism by many analysts who point to the president's unpredictable past behavior. The markets responded positively to these reassurances, with a noticeable recovery in major indices. The FTSE 100 in London rallied by 2.7%, recouping some of its recent losses, while on Wall Street, the S&P 500 gained 2.8% and the Dow Jones Industrial Average rose by 2.9%. These gains, however, are viewed as tentative, dependent on the unfolding trade negotiations and the president's future actions. The market's relief is fragile, predicated on the possibility of a negotiated resolution and a retraction of some or all of the tariffs. U.S. Treasury Secretary Scott Bessent has publicly stated his confidence in the ongoing negotiations, suggesting that the current maximum tariffs are a negotiating tactic, implying they are not intended to remain permanently in place. This statement, while offering a degree of comfort, does little to alleviate the underlying uncertainty surrounding the president's ultimate intentions and the broader ramifications of his trade policies. The lack of transparency and the unpredictable nature of the president's decision-making process continues to fuel anxieties within the business community and beyond. The president's gamble is high stakes. The potential economic consequences of a protracted trade war are far-reaching and deeply concerning. The global economy is intricately interconnected. A disruption in one major market inevitably reverberates throughout the system, potentially triggering a cascade of negative effects. While the administration frames these tariffs as a necessary measure to protect American interests and level the playing field in international trade, critics argue that they could inflict significant damage on American consumers and businesses, leading to higher prices and reduced economic growth. The long-term effects of this aggressive trade strategy remain uncertain, with the potential for both short-term pain and long-term instability. The coming weeks and months will be crucial in determining the outcome of this bold gamble and its lasting impact on the global economy. The world waits with bated breath to see if President Trump's strategy will yield the desired results or instead unleash a full-blown global economic crisis.